Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Monday, the 17th of April, 2017, about 2:15 p.m., and that is Central Daylight Time. And as you can see, a sea of red in the grain markets. The only part of the grain complex that was up, really, I consider cotton part of that, even though we don't need it, of course, but it's a fiber, up 160, and soybean oil. Barring that, just about everything else of importance was down on the day. Yeah, we had a bunch of the softs up, cocoa, I think coffee, but we'll get to those markets in a minute. Still seeing some selling pressure on the energies today. The stock market up. The gold market, since the settlement time, which was 1:30 Eastern, 12:30 Chicago, has fallen about $7. Pretty important reversal. We'll see what that means as I do the metals. But in taking a look at soybeans, we've had what we call a bounce. Now, this is the weekly chart, the lead contracts, the May for it. We had a bounce in the market, and the key is 929 3/4. If it's taken out this week or next week, I would then call the bounce a bull trap. Why? Because last week we had what's called an outside week up, actually a key reversal. There's many names you can give it, because it was the lowest low with this whole break that the markets had. Then it reversed and closed higher. It went up so far this week, as you can see, made the higher high, the market closing lower on the day. So we'll find out what this is all about over the next rest of the week and early next week. But I tell you, I'm watching that 29 3/4. If that gives ground, there's going to be a problem. The good news is if the market backs off and doesn't take it out, we then have this high of today, 962, is an important number that I'll be watching. But you got to get to the formations before you can do anything, and that's going to take the rest of the week to know. July beans, the area chart of closes has gone from 48.5 up to last week 66.25, and now we're down from that about 2.5 cents on the close today. Nothing big there, but still an up thrust. You can see how the market looks on the daily chart here, and it was the highest high of the move with a reversal today that took the market back down. And we put on the swing line study. What we have is the higher high and a lower low. So there is no trend. When a market's trending, you'll have higher lows, plural, and higher highs, or in a trend, a downtrend, lower highs, lower lows. This is the pattern of no trend, when you have, in some sequence, the higher high and the lower low. I don't care which was made first, but there's no stepping ladder to it. Where did the market fail today? Well, if we come back, you can see. Here's the market coming up, and this was last Wednesday. So the market's rallying. One of the resistance points, if the rally continues, is going to be 973. Now, why did I pick this date? 62.5 on Wednesday took out the previous low of 960. So what we have is a swing line that was negated, and as that's negated, maybe the market goes to that 18-day average looking for a resistance area, and that's the area. Remember, I consider the 18-day average of closes the key on many charts because it is what I call the reset line, the support resistance line. It's both. And it's a magnet. If the prices are under it, it often goes to it. If it's above it, it often falls back to it. So it's a number that I always pay close attention to. You had stopped hitting the Bollinger Bands actually around the very 1st of April, and if we tie to it, and this is very important, we tie the embedded readings. On Wednesday, you still had your embedded reading. On Thursday, you lose it. That means price and the 18-day average, in theory, should come together. They literally got there on Thursday because 70.5, with the high of 7.5, you're right there. You tested it today and you played with it again. So we know that's now the resistance zone. In the meal market, you got well over that 18-day average. Again, you have a pattern, though, of a lower low and a higher high with a good size reversal. Now, the crush came out today. They didn't crush anywhere near as many beans as the trade was looking for, and they're still seeing a little build in the soybean oil stocks, yet oil was strong. Again, I'm going to point out this 18-day average. That's your resistance point. You lost the embedded reading. But when you get to the 18-day average and you went through it by 4 points, you've hit the goal of the market. Now the question is, what does it do to restructure? And that's what we watch for tomorrow. In the corn market, we had a test of the green line. Now the green's the 100-day average of closes. And the market got up and over it and pulling back to it. And that's the first test it's done in a while. And as we go back, we can see that recently you tested it here and failed. Not back here. You got over it for a long period of time and held it. So these are the recent tests of it. So it's a resistance point. What else? As the market got up, it was overbought. So let's go to last week and catch you up. Resistance is the upper Bollinger Band if prices keep going up. And you do have a pattern of higher highs and higher lows, so you're bullish. Resistance, the upper Bollinger Band. You hit it on Wednesday. If the market on Thursday decides to pull back, don't be surprised if the resistance of the 100-day average of closes becomes support on the way down, and that's exactly what you're doing. Should that give ground further, it might reach to the 18-day average of closes, but the bulls are still in control until you take out 365 and a quarter. You are overbought, in need of a correction. It may only carry between the 100-day and that 18. In the wheat market, you got up, and we pointed this out last week, to the combination of the upper Bollinger Band and 100-day moving average of closes. Awful lot of resistance at that with an overbought condition. I'll show you what that looked like right here. That's where I think the pros were taking money off the table. Now, I don't think you were trending either. You had a lower low and a higher high. But you have the upside bias in an overbought condition. The market starts breaking down. If it continues to break, I'm going to look for the 18-day average as that support zone. It sliced through it. If you get further slice in the morning because momentum is turned down, 431 and 3/4 will be the lower Bollinger Band. A lot of traders are going to hone in on this 430 level. Close under that, and I think a lot of traders will say that what they were hoping for a general bottom area in that 430 level just didn't hold. We'll see. Sugar market, like so many of the other markets, all we did is we had the swing line turn up under the 18-day average. The market back here lost the embedded reading. There's the embedded. When it's lost, you look for price and the 18-day average to come together. Still not there, but still in lost embedded reading. Can't be regained now. You start making your run, get to it today with a big reversal down. So now what do we have? That was Friday, rather. I should say Thursday because we were closed on Good Friday. That was Thursday. Got the lower and low today. So now until you take out 1713, the pattern is still one of the swing line pointing up, so the trend is up, but the bias is down, and that 18-day average continues to be a real sore spot for this market, unable to get over it. The market is oversold, and that's about all that you can say. So I don't see a trend there. In the coffee market, the market is trying to probe the upside. The upper Bollinger Band is stopping the rally. You got over it for a few points, couldn't do anything. You're not trending. You have the pattern of a higher high and a lower low, but momentum is pointing up. So if the market can get through this enough, maybe it can reach for the 100-day average. Is there any way to get short the market if you see a break here? Well, if the market were not to take out 144.15 and break through the lows of Thursday, right here at 140.75, that would be a signal that this is a turn down into the trend and probably 139.05. So what else do you know? You know the bulls will try to support the market at 141.50 if they think they can get an uptrend going. In the cocoa market, the market just moved to the right-hand side of the lower Bollinger Band. It's trying to embed. It's still a very sick market. Too much, if you will, product on the market, lower highs, lower lows, oversold, but can convert to embedded if the market, this is the close on Thursday, this is today, if tomorrow we get these numbers both to stay under 20. In the cotton market, the cotton was an interesting play today. We came in, and this was Thursday's close. The market was hanging at this 18-day average, but it had already taken out 77.38, which had made the market higher lows, higher highs, and once it took that out and stayed over the 18-day average, I think you got short covering that might extend even further before it's said and done. But the trend up. Support 77.37. You wouldn't want to see it back under 76.06. Momentum up as well. In the cattle market, this is still a very bullish looking chart in the sense that it's riding the upper Bollinger Band. It is overbought, but the trend is higher. Unlike some of the other markets like the wheat where you got up to the 100-day average in the upper Bollinger Band, all you're fighting with here is the Bollinger Band. And yes, I do not think pros are buying the market on that Bollinger Band. I think pullbacks will be well supported. Feeder cattle, the same thing. Anybody that's tried the short side of cattle in a long time hasn't fared well. Hogs have done a better job on the bear side, but they are so oversold that each break is not getting any momentum to break even lower. I'd be very, very careful of that market. So when you put it all together, you got some interesting plays, especially today in the stock market that has come alive in the second part of the day. Very, very interesting. Now, I want to remind you about my charting course. A lot of you took advantage of it over the Easter holiday. As of tomorrow morning when we come in, we're turning off the discount coupon, which is IRA 15. It's $15 off the price, and I'm raising the price of the course. So the price is going to go up. The discount is gone as well. Two elements are going to happen here. And as I told you before, I believe that the course should be in the neighborhood of $200. It's what I think it should be valued at. Right now it's $89.95, and with the $15 discount, what do you get? $74.95. No shipping, no handling. You get access to my market research, $60 every 30-day value thrown in. Charting software to go with it because you need the charts to keep up with what I'm going to teach you to do in 54 videos. $100 value thrown in. $160 of freebies thrown into the course, 54 video chapters. Instead of $200, the whole thing, $74.95. If you put in Ira 15, remember what I just said, it will end tomorrow. Take advantage of it, pretty simple. Go to our website, www.iraepstein.com. Go to the word education. You'll see the slip down. Click Purchase Course. You're going to see on there links to the facts, so if you have questions about the course, it's there. There'll be a short video that tells you how I teach, what it's all about. You can call us at 866-973-2077, or you can click right up here if you're watching me on YouTube, and from there it'll take you right to the same page. Take advantage of it. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.